next question is from Don, who asks, I have heard that leveraged ETFs are best for day trading due to the way the value is recalculated every day. For example, the leveraged returns don't correspond the same way when holding over an extended period of time. Would you explain if this is a concern when using them in ACS?
Well, it depends on the leveraged ETF. So the 2X ETFs, they track pretty darn well. If the S&P 500 rallies 10%, the 2X ETF will probably rally like 19% or 19 and a half. It'll be close. The key with leverage, if you use a 3X ETF, it's not the same. 3X for some reason is way out of whack. Be very cautious. So they kind of cut both ways. So a 2X or 3X, instead of the S&P, say the S&P 500 rallies 10%, the 2X will rally say 19%. The 3X might only rally 25% or 26%. It won't triple. It won't be a perfect triple. It'll always make a little bit less. And what I found with the leveraged ETFs is, say you have a 5% stop on the S&P 500. Well, if the S&P 500 falls 5%, the leveraged ETF, like the 2X, might fall actually like 5.5%. And the 3X might fall like 6 or 7%. So you don't make as much upside. And when it does correct, it actually corrects more than the S&P 500 because it has like it's losing value the way it's built. It has like contango, it has extra fees, it has more stuff worked into it. So when it does fall, it falls quicker. Now with the ACS strategies, our trades aren't that long. You can do the 3X because most of our trades don't last very long. And I mean, if you're going to hold them for many years, it's a crapshoot. It depends on your risk tolerance and if you can accept the difference. But put it this way, when you use a leveraged ETF, we follow the ACS signals. So if the S&P 500 hits our 3% first target in this kind of volatile market environment, and say your leverage 2X is only up 5.5%, do not wait for the leveraged ETF to hit the 6% target. When our strategy says exit based on the core index, you exit the leverage. Do not wait for the double or triple returns. So just follow the actual trade alerts, the timing of the trade alerts, and use those with the leveraged ETFs. But our strategy, I mean, you can get away with it using the 2X and 3X. They add a little bit more downside risk and you don't quite double or triple the returns to the upside, but they do provide a lot more juice. If you've got a smaller trading account, then if you've got a smaller trading account, it'll allow you to have more buying power and generate more profit with a smaller account. So it's worthwhile dollar wise and time wise to follow a strategy.